Welcome to today's lesson of the day. Adjust your plan. Don't throw away your plan. You always want to listen to the cues of the market. You don't want to be out there ignoring what the market is telling you, and if it's suggesting something is strong or weak, just fighting it all day long or all morning long or all week long if you happen to be a swing trader. But you do want to make adjustments as opposed to throwing out the baby with the bathwater. And sometimes it's easy to say something isn't working or I'm not reading this right. I'm just going to give it up and go look for something else. That's the easy answer. If you want to take the easy way out, it is what it is. Go ahead and do that. But I can tell you that you're not going to have success as a trader if you do that. Because when you find your plan in the morning or in the afternoon or the evening before the next trading day, you're setting up your levels, you're picking the right stocks that are there to be trading, you're putting effort into that. So if you are unwilling to use that effort to make positive trades and to make the money, then it's going to be tough sledding. Every now and then, there are going to be moves and opportunities trading that come out of nowhere, and you'll completely trade something you weren't looking at previously because something sets up. But for the most part, you want to leverage the work that you put in and change your plan, if you have to. Now, we all love to look at a stock, look at a key price level, and say, this is it. This is the line in the sand. This is the Alamo. I've got conviction in it. But what happens if your general idea is kind of right, but you're just missing the opportunity? Your entry price is not getting targeted. Your stop price is just off. So what are the ways that we can subtly adjust the plan to pay attention to what the market is giving? I'm going to give an example over the last couple of days here in Tesla. And Tesla under pressure today. Now, as we're obviously talking about it today, they had bad delivery numbers, so it's a bit of an outsized move. But if you look at the last couple of days on Tesla, it was pretty easy to sort of see why you were favoring short under 178. So the overall plan the last couple of days for myself was here when we look at this chart. Why is 178 key? Pretty obvious chart ram. Is 178, you have resistance a week and a half ago. You have a breakout off 178. There's a lower high. There's another lower high. When it retakes 178, you get afternoon resistance, and then the next morning, there's your flush off of that level. So it's pretty easy to key off, okay, well, underneath that, it's failing a breakout, and we're looking for shorting opportunities. Now, here's the problem. Yesterday, when it was a great flush, were you able to, unless you were short in the pre-market at 7 a.m. or 6:45 a.m., if you're a trader like most people, are you able to short the 78 level? No, you're talking about 75 half into 76 was your shorting chance. And if you didn't short that, you were shorting breakdowns and you were shorting lower. And then similarly, if you looked at the next key level to the downside, which would be obviously right here, you had a close at 175 change, you had an afternoon high at 175 change, you come in the next day looking short into that level. At no point in those 2 days is it actually giving you the entry to the normal risk parameters for a lot of day traders to the short side. But what is actually happening in this particular case is it's falling and rejecting off of the resistance level. So the idea to be short under that resistance and favor that trend is correct. But the actual level that you're working off of, which is good, is not providing you with the entry point. So how do you adjust to that? Well, the easiest way to do it, which is my preferred method, is simply find other entries underneath so that you can take multiple swings beneath that key price. So what does an alternate entry look like? I'm going to go over to a lower time frame chart here just to give you an idea, like you're just talking about today. So you're going to miss out on that big pop up into 175, which you're hoping for off yesterday's close, off that lower high in that 15-minute that we're talking about. But what is available for you? There's your trend to the downside pre-market. Now, obviously, do you know they're going to drop delivery numbers in there? Probably not. If you're a pre-market trader, you kind of know what I'm going to say here. It holds 173 and then gives you a lower high off of 173 right in here, and then you get a bottom break off of consolidation. Now, granted, This is a flat bottom break with a breakdown here with a lower high stop. Remember, you're not giving it to 176, which is your key level. You're just looking for a short setup that's in front of it. That's $1 worth of risk. Obviously, it's 100% hindsight that they dropped deliveries there, but that setup is there regardless. It's failing the 173. It's got the lower highs. You're short underneath your major support, and you're following the trend. It's not I'm getting short 175 even, and it's dropping $10, and I'm only risking a buck. It's not that trade necessarily, but it gives you one other opportunity to get in. Now, the other way is to just suck it up, buttercup, and look to short the first available pops. That's the other thing you can always do. That's something I don't necessarily have trouble with. I'm usually looking for that back into VWAP. However, this can even run into trouble. And if you watched our morning show today, you would have heard me say, I like a 168. Why do I have that line in there? If it had a big drop, I was looking at the 168 level. Why? Because it was simply the next support level down once you were through this 73 zone. So I'm looking at that 168. It was a key breakout price on 22nd. Then you came in on the next Monday, and it was the bottom. So as it pulls back in, my next resistance spot is a previous support level, and I'm looking for shorts into 168. And once again, Tesla is so weak that it doesn't get to that price level. And so there's another way that I want to quickly add in here that you can do. Yes, taking multiple shots underneath it is a way to go. Sometimes, and this is especially true in a trending stock, if there's a really good price that everyone was looking at technically, sometimes you almost don't want it to get there. It's like if it gets there, you're probably going to run the stops. Like the way that this was selling off, if it ever got to one of these key levels, the 68, the 73, after a flush like that, obviously, the 76 the day before, the 78 the day before that, you're probably going to have a little bit of shenanigans out in front of it, breaking stops out and putting people to test before it comes back in. However, I'm going to show you a mistake that I made and why this is about learning from mistakes. When I'm adjusting to shorting underneath on the first pop, I'm shorting 66 into a local high. That's about 66.5. When it then holds 67 in, I don't mind stopping out at 67. However, remember what I said at the beginning. Do not throw the baby out with the bathwater. While I've adjusted to a stop underneath so that I can be in the short that hasn't gotten to my level, it still hasn't broken 168. And as long as that has happened, you are not giving up on the shorting opportunity. So when it wicks this top, the way I see it, this is a must entry here. It's wick the top and show me an out. Maybe you can jump right back in it there. That's A plus if you're really quick and you're like, yeah, a couple minutes later, it shows me the immediate lower high, you jump into that scalp trade. This one here is a little bit more obvious because it goes in, puts in a pretty distinct lower high, and then you see weakness, again, underneath 67, not 68. If you get married to the perfect price, you might miss the best price the market is giving to you. And if that happens on a consistent basis, then all the work you've done to prepare to trade the right stock gets thrown out the window. Now, it's not always about adjusting to an individual stock and maybe an imperfect price level that works with your trend for your adjustment. Sometimes it's adjusting to trading something else that still fits your plan. Now, the example I'm going to give here is, look, I was looking for shorts in NVIDIA today. And NVIDIA, there was a moment that it looked like it was weaker than the rest. And I even had it probably at the right spot. I had a couple of shorts in here off of a flat bottom break. And then I had a short off 85, which looked good for a hot minute. I did not get the reload. When this happens to you, I'm like, okay, semis are looking relatively weak, and this was true at the moment. And you're looking for the short off of 885 on NVIDIA. I get in, I get wicked out. I'm trying to grab that quick fill to re-short that. I don't get it. In that exact moment, you have a few options available to you. The move is happening. I can chase NVIDIA, maybe get it outside of my parameters and short it $2 further than I want to, risking twice what I would to my stop level. What you can also do is go back to your preparation. Okay, is there anything else in the chip sector that I liked for weakness that is giving me an available setup that I can pair with that trade? If the answer is no, the answer is no. But if you put your work in, and you'll see us do this in the live show all the time, like maybe we're looking at Tesla and Rivian, maybe we're looking at Mara and Coinbase and something else, maybe we're looking at NVIDIA, AMD, Micron, and Intel. And in the chip space, I'm always going to have a few bullets to fly. In that particular moment, there was a nice wick top and a VWAP retracement short the pop in AMD. So you had a sympathy stock with a setup that I love already, which is the short back into VWAP on a trend, and you also had NVIDIA going first. So everything lined up to be able to say, hey, look, I know I wanted that 885 short on NVIDIA. Well, guess what? You didn't get it. Fine. Can you quickly find something which is adjacent to that trade, which gives you another opportunity to express the move to the downside? Maybe you can go to the ETF in that moment. For me, I had put the effort in to be looking at AMD and its trend and knew what was going on because I was following that chart. So leverage that. Just jump into the trade. Now, I did not hesitate here. I missed it. I flipped over. It set up. I just went short because I knew it's like short it here, give it to there. And it goes to the low of the day. Now, obviously, I'm not trying to tell you in that moment that that's better than shorting NVIDIA. The whole point is that I don't get that trade. If you get the NVIDIA trade, then fine. I'm not telling you to double up or anything like that. But you've got to be able to adjust without throwing out your plan. If I go from NVIDIA to just, let's see what's happening over in Google in the moment, when I missed that move, that doesn't make any sense. I'm trying to express a move in the semi-names. I want something which is adjacent, something that I put the work into and analyze the levels, or is giving me a setup that is something I know that I want to trade. And the more you do things like that, the faster it will be to make the adjustment. Because it's only a matter of minutes sometimes, or even seconds. But if you kind of know the stock you need to flip to, or you already have it up, and you know the setup reversal that you're looking for, and you know the sector you wanted to be in, then it's easier to make that adjustment. So whether you get the best move possible, don't sweat it. The market's going to give you plenty of opportunities. Listen to it. If it gives you something adjacent, have something to be able to take it. Leverage your opportunities. I will probably trade half a dozen momentum stocks a day, but have put in work on my iPad for levels on 20 or 30. So when I miss something, I'm going right to those levels and right to those stocks. I know what I'm going to do. But almost more importantly, Tesla and stocks that do this are the bigger example. I know for certain this happens to traders on a daily basis, and it's frustrating. You have a level, it's key, the stock rejects it, trading off of that level would have been the best ever, but it doesn't quite get there. What you've got to be able to do is find a different entry into that stock. If it never breaks the resistance, then you do want to be short. If it never breaks the support, you do want to look for that long with the trend. But you might not get to short it or long it off of that perfect stop. In that case, you've got to adjust and have different setups. It could be a retracement into VWAP. You can use whatever indicator you want. In this particular case in Tesla, I had 168 as resistance. It never broke 168, and I only shorted it, taking one out for a loss there when I could have done it 3 or 4 more times. So you've got to be willing to listen to the market, adjust your entry points, maybe tighten stops if you have to, and take multiple shots. You have to also be able to pivot from one stock to another or one opportunity to another within the bounds of your plan, if that's what the market is telling you, because you got to be mentally agile while trading. Your lesson of the day is adjust, but do not throw out your plan when the market is telling you something that you weren't perfectly expecting. You want to listen to the market, but you don't want to throw that good work away. That work is what's going to pay you in the market. So stick to your plan, but make those slight adjustments. That's the real deal.